AI systems now have the ability to see every deposit, every withdrawal, and every transaction you make. And the IRS just gave itself the power to drain your bank account to zero without ever stepping into a courtroom. 87,000 new agents, $80 billion in new funding, and none of it made front-page news. In this video, the 4 things the IRS quietly changed. How their new AI tracks your money in real time. The 1983 rule that is now catching millions of Americans who did nothing wrong, and 5 things you need to do right now to protect yourself. In August 2022, Congress passed the Inflation Reduction Act. Buried inside that bill was the largest IRS funding increase in history, $80 billion over 10 years. The IRS annual budget before this was about $12 billion. Where did it go? The IRS hired 87,000 new employees. For context, the entire FBI has about 35,000 employees. The IRS now has more than double the workforce of the FBI. The Department of Homeland Security has about 60,000. The IRS is now larger than both, but the majority of that hiring was not for customer service. It was for enforcement, auditors, investigators, collections agents, the people whose job it is to find money you owe and take it. The IRS completed 582,944 enforcement actions in 2025. That is up from 4,994,000 the year before, an 18% increase in 1 year, and the pace is accelerating. At this rate, enforcement actions will exceed 700,000 by 2027. They told Congress this money would only be used to go after wealthy tax cheats, people making over $400,000 a year. But the data tells a different story. Audit rates for taxpayers earning between $25,000 and $100,000 increased by 47%. Meanwhile, audit rates for those making over $1 million only increased by 9%. That is not what they promised. That is retirees. That is Social Security recipients. That is people living on fixed incomes being targeted at 5 times the rate of millionaires. The IRS did not announce this. There was no press conference, no letter in the mail. They just started auditing more people and hoped nobody would notice. This is the part that should concern every American with a bank account. The IRS built an artificial intelligence system that monitors financial transactions in real time. It is not new technology. Banks have been filing currency transaction reports on deposits over $10,000 since 1970. But what changed is the scale and the intelligence behind it. The old system was simple. You deposit $10,000 or more. The bank files a report. That is it. A human somewhere might look at it. Probably not. In fact, most CTRs were never reviewed. They sat in a database and collected dust. The new system is completely different. It uses machine learning to analyze patterns across every financial institution in the country simultaneously. It does not just look at single transactions, it looks at networks. It connects your checking account to your savings account, to your spouse's account, to your business account, to your Venmo, to your PayPal, to your cryptocurrency wallet, all of it in real time. The system is called entity resolution. It takes every piece of financial data connected to your name, your social security number, your address, your phone number, and it builds a complete picture of your financial life. Every dollar in, every dollar out, where it came from, where it went, and it cross-references that against tax returns you have already filed to find discrepancies automatically. And here is what most people do not understand. There is no minimum threshold for a suspicious activity report. A bank can file a SAR on any transaction of any amount if something looks unusual to their system, and they do not have to tell you. You will never know AS was filed on your account. It is actually a federal crime for the bank to tell you. In 2025, banks filed over 4 million suspicious activity reports. 4 million. That is 11,000 per day. And each one goes directly into the IRS database where the AI system analyzes it alongside everything else it knows about you. If you sold a car for cash and deposited the money in chunks, the system sees that. If you received a large gift from a family member, the system sees that. If you started withdrawing more cash than usual because gas prices went up 34% in a month, the system sees that too. And it flags it. Even receiving regular deposits from a family member who is helping with your bills can trigger a review if the pattern changes. You did nothing wrong, but the system does not know that. It only sees patterns. And once you are flagged, the burden shifts to you to prove your innocence. But everything I just told you is not the worst part. The worst part has been hiding in plain sight for 42 years. The IRS uses something called provisional income to determine how much of your Social Security benefits are taxed. If your provisional income as a single filer is between $25,000 and $34,000, up to 50% of your Social Security becomes taxable. Above $34,000, up to 85% is taxable. Those thresholds were set in 1983 and 1993. They have never been adjusted for inflation, not once in over 40 years. Every other major tax bracket in the code gets adjusted annually. These do not. In 1983, a $25,000 threshold meant you had to be earning a solid middle-class income before your Social Security got taxed. Adjusted for inflation, that $25,000 should be about $78,000 today, but it is still $25,000. The result is that millions of Americans who were never supposed to pay taxes on their Social Security are now paying taxes on it. In 1983, only 10% of Social Security recipients paid taxes on their benefits. Today, that number is over 56%. By 2030, projections show it will be over 70%. And it grows every year because the thresholds never move, but incomes do. If you have a pension, if you have IRA distributions, if you have any investment income at all, you are probably over the threshold. And the IRS is collecting taxes on your Social Security that Congress never intended you to pay. This is not a loophole. This is not a gray area. It is a threshold set 42 years ago that nobody ever updated. And the IRS has no incentive to fix it because it generates billions in revenue every year. Roughly $90 billion annually comes from taxing Social Security benefits. That is money the government does not want to give up. Now here is the part that connects the zero in your account to everything I just told you. A retired teacher in Ohio woke up one morning to find her checking account at zero. She had missed one letter from the IRS. She had done nothing wrong. The IRS had flagged a discrepancy on her return from 2 years earlier. By the time she found out, her money was already gone. If the IRS determines you owe money, whether from an audit, a miscalculated return, or a flagged transaction, they have the legal authority to take it directly from your bank account. It is called a bank levy, and it works like this. The IRS sends a notice to your bank, not to you, to your bank. The bank is legally required to freeze your account immediately and send the IRS whatever you owe up to the full balance. If you have $47,000 in your checking account and the IRS says you owe $47,000, your balance goes to zero that day. Your rent check bounces, your auto payment fails, your prescriptions get declined, all because of one letter you did not open. You do get a notice. But here is the problem. The IRS sends you a final notice of intent to levy at least 30 days before the levy happens. If you miss that letter, if it goes to an old address, if you are traveling, if you mistake it for junk mail, the levy proceeds automatically. In 2025, the IRS issued over 760,000 levies. That includes bank accounts, wages, and Social Security benefits. Yes, the IRS can levy your Social Security payments. They can take up to 15% of your monthly benefit to satisfy a tax debt for someone living on $2,000 a month in Social Security. That is $300 gone every single month until the debt is paid. And with 87,000 new agents and an AI system that flags millions of transactions per year, the number of people who get caught in this system is growing every month. Here is how to protect yourself. Number 1, check your IRS transcript. Go to irs.gov, create an account, and pull your tax transcript for the last 3 years. If there is an issue, a balance due, or a flag on your account, it will show up there. You want to find problems before the IRS finds you. Number 2, make sure your address is current with the IRS. If they are sending notices to an old address, you will never see the 30-day warning before a levy. File Form 8822 if you have moved. This is free and takes 5 minutes. Number 3, do not structure your deposits. If you have a legitimate $15,000 cash transaction, deposit the full amount at once. Do not split it into 3 $5,000 deposits thinking you are avoiding paperwork. That is called structuring, and it is a federal crime. Even if the money is completely legal, people have lost their entire savings over this. Number 4, calculate your provisional income. Add up your adjusted gross income, your tax-exempt interest, and half your Social Security benefits. If that number is over $25,000 as a single filer or $32,000 married filing jointly, you are paying taxes on your Social Security. A tax professional can help you find strategies to keep your provisional income below those thresholds. Roth conversions, qualified charitable distributions, and timing your withdrawals can all make a difference. Number 5, respond to every IRS letter immediately. Do not put it in a drawer. Do not assume it is a mistake. Every letter has a deadline. Miss that deadline and you lose your right to dispute, appeal, or negotiate. The IRS does not care about your excuse. They care about the date on the letter. The IRS got $80 billion, hired 87,000 agents, built an AI system that monitors every transaction in the country, and the thresholds they use to tax your Social Security have not moved since 1983. None of this was on the front page. None of it was explained to you, and none of it is going away. The next video I am making will show you the 5 legal ways to reduce your taxes in retirement that the IRS hopes you never learn. That one is going to save some of you thousands of dollars. Make sure you are subscribed so you do not miss it. Drop a comment. Tell me, have you been audited? Have you received an IRS letter you did not understand? I read every comment. That is how I decide what to cover next. I will see you in the next